Good afternoon, everyone. This is Kim Schmidt, Executive Editor of Farm Equipment Magazine. Welcome to our latest webinar in conjunction with the Western Equipment Dealers Association and Dealer Institute. Today's presenter is Trent Hummel, a Dealer Institute trainer, and he's going to dive into some ways dealerships can generate more cash without selling more. Before we get started with the presentation, just a few housekeeping items. On your screen, there's a control panel with a Q&A icon. You can submit questions here at any time during the presentation, and time permitting, we'll look to answer as many of your questions as possible. And then if for any reason your internet connection gets interrupted and it looks like the webinar has been interrupted, go ahead to the email you received earlier and you can rejoin the webinar that way. All right, we are ready to get started. Thanks again for joining us, and take it away, Trent.
Okay, hello everybody. Thanks for joining us today. And I know that the days are getting longer and everybody's getting excited and spring's around the corner. And when we turn our clocks ahead in 10 days from now, 9 days from now, you're all going to think you're too busy to do any of this stuff, but you're never too busy to try to generate cash. So let's get started on this. Oh, Kim, it won't forward ahead. Oh, I hit the wrong button. There we go. Sorry. All departments. We're going to look at all departments: accounting, service, parts, and whole goods. But the decisions we make in the good times carry us through the bad times. And we've heard that. All of us have heard it 100 times, but it's true. And I even think that maybe we've gone sideways on that a little bit, because this summer we worked with a lot of dealers that were in the good times because they were selling under 100 horse type products. And by October, they were out of cash, and they should have been full of cash in October. So even in good times, they were making poor cash decisions. They're going to have a real hard time making it through the bad times. Think about this comment on the screen there as we go through this webinar. We're going to talk about a lot of ideas and a lot of things to help improve your cash in all these departments. And I want you to be thinking the decisions in the good times, what you've done in the past, what you've done during the good years, what you've had to do in the bad years in order to make some payroll or to make some money in the account so you can make payroll and stuff. Okay, so an organization has two purposes: to earn a profit and generate cash. Now, these are two totally different things. There's a lot of guys that think if you're earning profit, you're putting cash in the bank, but in this business, it's not like that. This is a cash-eating business. We can go through cash like no other and still show a profit. So we call those paper profits. And there's been a lot of dealerships, and you can ask your accountant that's paid taxes to the tax man every year on money that wasn't really actually cash in the account. So actually they're having to find more cash to pay the taxes on paper profits that they're not really there. They're not in the form of hard currency. So earn a profit, generate cash. We're going to talk about generating cash. We're not going to talk about earning money here. That's for another webinar. "20 years ago, when we went to when we moved off of in-house accounts receivable and went to the manufacturers of the OEMs account receivables, I mean, it was kind of a hubba bubba. People were upset, customers were grouching about it. And then my dad reminded him that in 1975, when he bought the store from his uncle, my great uncle, they were given annual payment terms, so once a year. And my dad and his partner were young guys. They didn't have that kind of cash, so they moved them to monthly. And it was a big deal in 1975. So in 1999, when we switched all those accounts receivables to paying as you go, it wasn't such a big deal. Now, I still think dealerships are scared to ask their customers to pay for stuff. I was just at a dealership the other day, and they said, we can't ask that guy to pay. He's been a good customer. Well, if he's a good customer, you can ask him to pay. It's only the bad ones that don't want to pay. So the government accounts are always the biggest deal here. It seems like the government's, and it might be just the school board or the county, they never seem to want to get off that accounts receivable because it works. And I granted, you're not always going to get those guys off. You're going to lose on some of them. But for the most part, I think if you go to the government accounts accounting department and ask them to switch to credit card, a lot of them will do that because they've got these credit cards that earn points or cash back, and they can figure out, hey, it's it's a little easier for us to manage on that side, and it works for them. So I think for the most part, dealerships ask the wrong person in government to go to accounts receivable or put a credit card on file. So there's also independent AR providers now that like to have dealers to host these things. Now you have to be a little careful because they got some serious fees in there, and there's some penalties on your customers and so forth and so on, but they're there for our taking. So if you can get all these people off your in-house accounts receivable, you're not a bank, you need that cash. So canceling an OEM, canceling a short line. I mean, I've promoted this lots, that we need to start canceling more of the short lines we have. They're just, most dealerships are running too many. They signed them up in the good years because they could sell one or two of those items, thinking they're going to sell more. They couldn't sell any more. But what you need to look at is you need to look at the data from all the departments. Is parts making any money off that short line? Is service? How difficult is it for accounting? Are they paying, is the short line paying their warranty in 60 days? I had one short line that didn't pay their warranty for 90 days. I mean, it was the best thing we ever did when we skidded that short line. But I'll tell you this, there is some rules in these, in short lines. Every state is different. So you need to talk to your dealers association for guidance, get some guidance on the short line, because they're not very easy to cancel, and they're not, you can win with it or you can lose with it. You could get stuck with product that now you don't carry the line, but yet you still got a bunch of that product paid for, you can't return. So talk to your dealers association before you do anything crazy. Reviewing your expenses. I would be, you should be running your expenses by department. And I just was at a dealership. They don't have their expenses. They've only got, I don't know, 100 different expense lines when they should have had 500. So they can't really dive into their expenses, but they should be looking at their expenses with their department managers and explaining that we need to reduce these expenses. And I know a lot of you guys have done this because we're in bad years. So you've already done this, but when you get this in front of some of your department teams and your technicians or your parts technicians, they will look at those and say, hey, we don't have to spend money here. We don't have to do this. We can do this. We can save here. I think it's a great opportunity to get those guys involved in making money. Saving money isn't always about just earning more. We make money by saving some cash on our expenses. Negotiating and changing service providers. This has been a big one. Right now, there's a lot of service providers that are clamoring for our business. I mean, I had a company I worked with, their cell phone bills were $12,000 a year, and they negotiated down to $3,600. That's a big drop. And they just did that with one phone call and got this changed. You've got to have the right person in the dealership when you're doing this, because you want the cheapskate employee to be the one that negotiates with these providers that has no emotional tie to any of them. And they'll just go for the cheapest thing that they can find. My cousin got mad because our insurance provider for our dealership decided he was going to up our insurance by 30%. And so he drove home that day at lunch, and on the park bench, there was an advertisement for an insurance company. And he got back to work and he phoned them, and they were 30% less than what the current rate was. And they give the same kind of coverage. And we're still with them 15 years later. And only because he was mad and only because it was on the park bench did that ever happen. But so you don't know where this is going to come from. What person in your employment will figure out where to save money in which area. Now, the other thing is department managers. I'm going into a lot of stores where they're not being held accountable for their department expenses. And they don't have any control over them. They don't get to see them. I know there's a lot of expenses in departments that are not controlled by the department manager, but at least he should be looking at them and having some say and be thinking about how he can cut some expenses in his department. He needs to be accountable. That's one of the things that's part of his duties. Now, the other thing you want to do is you want to have a culture where the employees can suggest and challenge status quo regarding expenses. I've been to too many dealerships where the employees are, the department managers are scared to even ask accounting about certain expenses for fear the accounting will yell at them and give them heck for making them dig it up and more work and more labor, when the department manager just, it's in his best interest and the dealership's best interest for him to suggest and challenge and look at this and let's dig into it. I think we might be able to save money here, but the accounting department gets a little rough on them and says, we're not doing that. Don't come to me with this kind of stuff. Parts department. I was at a meeting one time, a long time ago, and there was a trainer and a consultant, and it was an association convention. And he was on the stage doing his speech, and he got dropped to his knees and said, everybody in this room should drop to their knees and thank the gods for parts department for the return privileges that the OEMs give us, because no other industry has this. I mean, if you were selling ladies' shoes, wouldn't you like to send back the stuff that didn't sell in season, or whatever you're selling? Even a whole goods department in your store would love to send back the stuff that didn't sell. Parts departments have the opportunity to send back the stuff that doesn't sell. Now, you need to maximize it. And every OEM has different set of rules. You need to maximize this every month. And some OEMs are only every quarter. And some of them got rules that it's only based on how much you ordered on your stock order during the year. They all got different rules, but figure out how you can maximize this every time. And you always start with the highest price part first to get it back, because that's where the cash is. You want that. I'm not worried about the 10-cent stuff. I mean, and yes, it's got to go back, but you start with the highest price stuff first. Most of you guys all know this. Now, the other thing you can do with your vendors is you can ask for a one-time exception parts return. And some of them will do this. I've had it happen multiple times with multiple vendors. And you just put a phone call in and say, we just need to do this one time. And if you've been a good dealer for them and you've paid your bills and you've ordered your inventory and you've sold stuff for them and been a good, clean dealer, they'll often give you this exception. And you can return a boatload of parts that up and above your maximum or your monthly maximum. Now, for short lines, I've done this, but they always seem to come back with a negotiated thing where they'll let you return $10,000 worth of their parts or 100, but they want an offsetting whole goods or parts order in return for that. And I didn't have a problem with this. My thought was, well, I'm just transferring out my dead stock and bringing in stuff that probably has a sale for it, or hopefully will have a sale or better chances to sell. And quite often, I would already have one of these whole goods items already sold. And so we would use that. It would be a pre-sold thing. And we would use that to say, okay, we'll return this $100,000 worth of parts, and then you ship us this whole goods item. We already had it sold. So it's a little bit of work. It's a lot of work. No kidding. It's a ton of work to get all this stuff done. But, you know, to turn $100,000 worth of parts into cash is a great thing. This helps the dealership in a tremendous way. Aging and paid parts. So we start with the highest and go down. You got to draft a plan. You should run a list from highest price to lowest price, return, swap, use it on a whole goods unit. And I know a lot of whole goods guys will be mad and heck saying, we don't want to use it on a whole goods part or a whole goods unit because all it does is run up the price of the unit. But I'm suggesting that if parts will sell that part to a customer or return it or sell it to a used parts place or a place that buys parts, they'll sell it for 10 cents on the dollar or 25 cents on the dollar. They should also be selling those parts to whole goods for 25 cents on the dollar. Whole goods doesn't have to pay full price on this. Parts is just happy to get any kind of cash out of a lot of this stuff. So whole goods should be in there negotiating. Parts should come to them and say, hey, here's $10,000 worth of parts that fit 4 of your tractors. We'll sell it to you for $4,000 because they've been on the shelf for 4 years. We got nowhere else to go with these things. Now, if they add $4,000 worth of value to the whole goods unit, whole goods will say, yes, we'll probably do that. But if it doesn't, they're going to have to say no. But they're sure as heck not going to go pay the $10,000 because it's not going to add $10,000 worth of value. Now, the inventory, this is a big one. The OEMs, they got these parts ordering programs, and I see dealers struggling and challenged by how to maximize the program. You've got to really study these programs because you might have to order all your filters a year ahead or in batch order for the whole year. And some guys say, well, I don't want to do that because I screw up my turns by ordering in bulk a year ahead, all my filters a year ahead. I'd rather just order monthly. Well, monthly order is great, and I understand that, but it depends what kind of savings you're going to get on those parts. If you're going to get a great big savings because you're going to get more terms and you're going to get this and you're going to pay less money for the part, you've got to have a look at these and really dissect how fast I'm going to turn these parts. Now, the other thing that I've seen happen with this is, I had a dealer that he needed 50 of these filters, but the minimum order was 100. So he phoned his neighboring dealer and said, you do the same thing as me. Why don't you order 100 of this kind of filter and I'll order 100 of that kind of filter. I only need 50, you only need 50, and we'll just do a swap when they all come. That way we still get the maximum ordering discount because we've ordered our 100, but we got them on, we got them as cheap as we can get them, and we're not oversupplying ourselves. So swap with other dealerships. Now, I can't believe this happens. And a lot of stores, the big complexes, what we call the big complexes, they're communicating well. They have a primary guy that orders all the parts. But the 2, 3, 4 store operations, and these are the ones that we talked about when we did a webinar, I don't know, Kim and I, maybe 2 or 3 months ago, that they're the ones that are in the biggest cash pinch position right now, the 2, 3, 4, 5 store locations. And what's going on is we're finding they're not communicating within themselves when it comes to ordering or inventory of parts. They'll have 5 on the shelf at one store, and the other store needs one, so they'll order it. And it's just crazy. You need to clean up that inventory. The big stores don't seem to do that, but that 2, 3, 4 store locations are doing that steady now. They're not communicating. They don't have a central ordering system. So it's just kind of all willy-nilly, and they're doubling up on their parts and they're ordering seconds, and it's crazy for cash. Matrix your parts. Now, multiple times I have talked to the OEMs about just give us an MSRP on our parts pricing that allows us to make a 30, 31, 32, 33% parts gross margin. And then none of us will have to matrix. And they just don't want to hear it. I don't know why they won't do it, because then this online parts shopping, if we all advertise at MSRP because it's earning us enough parts margin that we can survive, parts pricing online would all be the same. And then the customers, when I do customer focus groups, they're all, the customers just want to know that the parts that the price that they're paying for parts at their local dealership is a fair price compared to everybody else. That's why they shop online. If they just see everybody selling at MSRP, they'll just likely go to the local dealer, which is where we want them to go. Come into your local dealer and buy your parts. But no manufacturer has ever bid on this yet, and I can't figure out why. It would just help the whole industry tremendous amount. But most of us have a matrix. We factor our parts up or down based on whatever we're trying to earn, and we have different categories or different segments, however you want to say it. I think you need to have a review of that and see where some consultants will tell you that you should never factor the captive parts. You should always actually factor it under MSRP so that you get a reputation in the industry of the high price captive parts or lower price, and then your fast moving high volume parts, then you really factor the heck out of them. And some say it's vice versa. I don't know what's the right thing to do, whatever works in your market, but have a look at what's been working. Maybe phone your other dealers around you, find out what they're doing, what makes sense. I mean, everybody wants to make some money on parts because this is pure cash coming into the store. Parts in a work order. I've fought this for a long time with a lot of guys. I think a parts technician every day should walk out to the shop and walk around some of those jobs in the shop and try to look at, hey, there's a broken mirror on that windrower. I should be phoning that customer and saying it's in the shop. The mirror is $50, to install it is $20 or $10. Phone them and try to upsell on that job. Now, we all expect technicians to upsell parts in the shop, but I'm going to tell you, in my experience, I haven't seen a lot of technicians really get excited about upselling parts. They're excited about upselling service, but not parts. And that's why that tech should be doing that walk around. And he should be friends with the service technician and say, hey, is there anything you spotted on this job that you've been working on for the last 4 hours that maybe I should look at? Maybe I should phone that guy. And I know that tech will point out 2 or 3 things. You might want to phone him about this or that or here or there. And I know you can phone guys and upsell them on a job. My rule is every parts ticket and every service ticket should be upsold 10% before that guy walks out the door. And that's an easy upsell at 10%. 20% is a harder upsell. People won't bite on 20%, but they'll bite on 10. If the job in the shop is $700 and that service manager phones me and he's found $70 more of work, I am always going to pay 10% more. I'm going to pay $770 without even question. But if he starts to say it's another $140, I might just say, nah, don't do that job. So, our customers are exactly the same, always upsell by 10%. Now, parts freight. we're trying to collect enough freight from our customers on this to also cover our returns when we do our monthly or quarterly returns, whatever your manufacturer allows you, which I don't think that every parts technician understands, that it's not just to cover the freight on that part that come in. You've got to, if it's $10 freight, you've got to charge the customer 12, because that extra $2 goes into surplus account. So when you do your monthly returns, you're not using dealership's cash, you're using what's in that surplus account to send those returns back. So, and this should be posted every day. It should be come up on, maybe it comes up on your business system screen. Maybe it's written on a wall, whatever, but every day they should know where they're at, as if they're in the negative or positive. I just did a store here the other day, and they continue to lose, not very many locations, but $60,000 to $70,000 a year in parts freight, and have no idea. Parts guys had no idea they're losing that much money. They said, well, we're getting everything we can. I said, no, you're not at all, because you're not getting enough money to cover these returns. And they didn't even know that they were supposed to cover the returns with what they collect from the customers. Now we get into the service department here. So work orders. You know, most of us get really excited when the job is done, we phone the customer. But I'm going to say, don't ever phone the customer until the work order is closed. And then you phone. So the job isn't done until the work order is closed. So when you phone the customer, you can tell them how much it is. It's going to be $1,500, or it's going to be $2,500. And then when you got him on the phone, ask him how he'd like to pay for that, so that you can get his credit card right then and you can close it. Now, because what happens in this business is he drags a baler in this time of year, gets his work done, and you phone him and he's gone for 3 weeks on his winter vacation. You're not getting paid. So if you phone him, if you can get him to give his credit card when he drops it off, which is what my car dealer friend does here. I drop my car off there to get fixed all the time. And he says, let us write your credit card down. And when the job's done, we'll phone you, tell you what it is. We'll never run anything on your card until we phone and tell you what it is. And you say yes. But then when it comes time to pick up, it's easy. You just run in, you get the keys, and you're gone. You've already prepaid for this job. It doesn't take you 20 seconds to grab the keys. And 9 out of 10 times, it's my wife or my kid picking up the vehicle. So they never like to go in and deal with having to pay for this. And I say, well, you don't have to anymore. It's already prepaid. Run in, grab the keys, and you're gone. So that makes my wife happy, makes my kid happy, and makes me happy, and makes that store happy, because they're getting paid immediately after the job is done. So work in progress, WIP, under 10 days. I don't know what the right answer is to this. Some guys ask me all the time. I've had dealerships say they won't go under 3 days. They want their average under 3 days. There's other ways to measure it where you have, there's only so much, there's a percentage of work in progress that is compared to what your monthly close rate is, or your monthly dollar figure in that shop. And so I don't know which is the right way to go, but I know that we've got to reduce this all the time. When I go into a store and I see 10 pages of open work orders, some of those jobs haven't been worked on for 2 or 3 weeks. I'm wondering, why aren't these closed? Well, because we couldn't find the guy. So we can't close it because we don't have in-house accounts receivable. So we can't close it because we got nowhere to close it to. It just doesn't make, their whole process is a mess. The way they've, right off the get-go, they've screwed up by not having this guy's credit card so that they could close it and pay for this job when the job was done. Now, labor rate increases. How often should we increase our labor rate? You know, I was just at a store here the other day. They had an increase for 4 years, and then they had to do a $20 or $25 increase. Well, that makes the customers, it makes the salesman mad, because then all these internal work orders are going up, recon and PDI. I think we should be doing about twice a year, spring and fall. And I know some guys will say, well, that's a pain in the butt because your OEM will only up your rate, your warranty reimbursement rate once a year. And some will and some won't. I mean, I had one that said, well, if you can prove to us that you're doing it twice a year, maybe we'll let you up your warranty reimbursement rate twice a year. Well, I made that deal with him, but most of the vendors will only do it once a year. So I just had to go with the fact that the one that we upped in October by $2, I think we did $2 every time we upped it. So $4 every year. But when we upped it in October, we knew we weren't getting our warranty reimbursement rate where we wanted it, but we would often give a discount, a winter labor discount or something like that. So we weren't getting it off the customers anyways, unless they were walk-in or emergency, something like that. Warranty losses. this is something that everybody in that service department should understand what a warranty loss is, that we're not getting paid in full by what we're submitting. And I'm going to suggest to lots of you guys that your service department sometimes will quit when they submit it and it gets denied. They will quit right away on it and just lump it. I think you need to resubmit. Look at it, resubmit. My service manager resubmitted one job 8 times, and finally they phoned back and said, when are you going to quit? And he says, I'm not going to quit ever, because I know this is an OEM issue. It was a manufacturer issue, and you guys need to pay for this. And they finally relented and said, okay, we'll pay you this. And it was a $15,000 job. So you need to resubmit. But the big one is, who is submitting your stories? There's a big difference between the technical person that understands the shop, who crafts the stories, who writes it up, who knows what to say, knows how to describe it, because that person reading on the other end, when they say approved or not approved, if they get more detail and can understand the steps, if you have a if I was writing up the stories for service myself, I would screw it all up, because I don't know how to write up all that technical jargon that these technicians do. Now, I know you're not going to pull a technician off the floor to write it up, and he does a little bit of it, but you need to have somebody that is overall technically advanced in how to craft this story so that it gets approved easy. I'm not suggesting you lie, but there are certain words that are trigger words that make it work, and there's certain descriptions that make these things get approved. Now, and I know all you guys are doing this, there's the OEMs usually have little codes for diagnostic time or cleaning or incidentals, whatever they are, but claim them all the time. If they're legit, claim them. I mean, if there's always diagnostic time on some of these electronic things, if it's been in the field, there might be a cleaning little thing, claim it, claim it, claim it, because you've got to get that money coming back to you. Out of warranty jobs, you know, most places do this already, but I was just at a store and they just pay for these things because they said, well, the customer expects us to pay for it. I said, did you ever ask the customer and the OEM to share this? Because it's not really your fault. Yeah, it happened out of warranty. Ask the customer to go a third, and they didn't think that was even appropriate. And I said, well, you've never asked a person in your whole life about this. I think the customer would be willing to share a third. Now, a lot of this comes because the whole goods department doesn't explain to the customer when he buys the unit what the warranty is. And there gets to be a little bit of confusion by the customer onto what's covered and what's not, and how it's all going to work if something does fail on this. So I'm not going to kick the service department in the teeth, because I think whole goods in many cases can do a better job at explaining what the warranty is on a unit than they are. And it should be actually written on that sales order so the customer can look at it and see it and understand what it is. Now, recovery rate and billing efficiency. These two things are interchanged multiple times. I don't think a lot of people really understand the true definition of recovery rate and billing efficiency. And actually the words, the recovery rate and billing efficiency, are used in automotive. And there's a couple of automotive trainers that are working now in the equipment industry, and they use the definition or the formula from automotive, which is not the same as what we do in the equipment industry. So to try to explain and train to all your guys in the service department to what these are, this is where what it means to you, how much more money it means if you go from a 70% to a 75. But explain to them that recovery rate is about being on revenue generating work orders for at least 75% of their day. Now, some guys might be on 100% of the time and other guys are only on 60, but overall the shopper average should be 75% plus. You'll see guys talk about 85% plus, but that's because the dealership is using like the automotive way, and they're backing out hours that will never be able to be sold. Like when a guy's on vacation or he's on training, those hours are never going to be sold. Billing efficiency is another one. These guys are, technicians are a little bit motivated by embarrassment, I guess you could call it. They want to know that they're doing right. They don't want to be the bottom of the bucket. They want to have a high billing efficiency rate, a high recovery rate. They want to feel that they're contributing to the health of the business, that they're earning their keep. Nobody wants to feel like they're a dredge on the department. So when they understand this, and then you've got to provide the reports. Now, billing efficiency, I don't think we should ever write off hours without the tech standing there in front of the customer. And the customer says, well, I don't want to pay 20 hours for this job. I only want to pay 12. And the tech says, there's no way. You brought that thing covered up in 8 inches of grease and oil, and I had to clean it off, and I had to dig through all that stuff. And that's why you're paying for an extra hours, because you were told to clean it up before you brought it in. You didn't, because you were in a hurry, and then you made us do it. So when that tech is standing there and can explain that to the customer, that there is extra work to get this thing repaired, that's why you're paying for extra hours. And I think the tech should be involved in job quoting times to some degree. I mean, veteran techs can really help a service manager in job quoting, which I'm finding there's still a lot of dealerships that don't do job quoting, which is how automotive has done it and how all these loop shops do it. Everybody job quotes. It's a way we got to go. Now, to beat the job quote, so if you assign the job and you tell the customer it's going to take them 10 hours and you're going to be billed for 10 hours, you got to put the right tech on it so that he can do that job in 8 hours. So you can make up 2 hours. You earn 2 hours of just pure profit. That's how you get a high billing efficiency. You know, and I've seen now, I'm seeing more and more of this all the time where they put a senior tech and a junior tech on one unit. And so the junior tech might change the baler bands because that's an easy job. And the senior tech might do more complicated stuff. But sometimes during that job, there needs to be 2 hands just for 5 minutes. And now you got 2 techs on it so they can help each other real quick and then get back to what they're doing. And they're working this and it's working all right. It's a big way for a junior tech to be mentored by a senior tech too. Now this was a chart. This is what we used. This is how you can see up here at the top, tech number 1 is John. So this is every month. And you can see his payroll hours in January got paid 160 hours. But we as a dealership were paid 120 hours on internal revenue or on revenue generating work orders, which is customer, PDI, recon, or warranty. So that month he was 75%. The other 40 hours, he was on vacation or training or mowing the lawn or shoveling the snow or fixing the shop door, or changing oil in service trucks, whatever he was doing. But revenue generating work orders he was on. Now, if you go over here to March, he's at 80%. If you go to April, he's at 67%. His target is 75. So what's happened there? He's probably had a big job, maybe a big insurance job or just a big customer job that carried over the month end. So it never got closed. But then you can see in May, he's up to 91% almost. Well, that's what's happened, and it's carried over, and that's fine because we're going to, on the next slide, you'll see where we measure it by the quarter. So that takes the highs and lows out per month. And now the billing efficiency is the second part of this page, which our goal here is to have about a 90%. Well, depending on his tech, on his skill set, you'll see here in the next page. But the job actually took 120 hours and the customer was paid 120 hours. So he's got 100% billing efficiency. And what we're looking for is we want the job to actually take less. We want it to take, like in April there, 102 hours, but we charge the customer or warranty or PDI, or our job quoting was at 113 hours. So we collected 113 hours worth of revenue, but it only paid the tech 102 hours of his time. So he's at 110% billing efficiency. This is where you want to get. This is where every tech wants to be. He should have fire in his belly to do this, be above 100% all the time. Now I'll show you here quarterly. Quarter 1, quarter 2, this is still John. I mean, so this took his highs and lows out. You can see 75 or 76, 71% there. He's averaged at 73. Not too bad for a B-level tech. He's a B-level tech, which you can see. A B-level tech target should be about 100%. All job quotes should be based on a B-level tech. So a C is only going to get 90. I mean, he doesn't quite have the skill sets to bang it off as fast as an A-level tech. An A-level tech should beat almost every job that he's on. If he's been job quoted for 20 hours, he should be able to finish that job in 18 hours. An A-level tech is why they're paid big money, and that's how we can afford to pay him bigger money, is because he's billing out more time in a day than we're actually paying him. Now the whole goods department. You know, we remove these attachments and it drives me nuts. I've been to dealership yards one dealership yard I was at, they got $1 million worth of attachments out in the yard. And if I went and looked at them, and some of them been laying there 10 and 12 years, I don't think that stuff would bring $50,000 at an auction sale. But on the books, it's worth $1 million. There's only 3 reasons to remove an attachment. Okay. And one is because it's a junk attachment and it doesn't help the presentation of the unit. You unbolt it, take it off, and you throw it in the dumpster. It is junk. It doesn't help a thing. The other reason is you can sell the attachment on its own, but you only take it off if it doesn't affect the primary unit's value. If you're going to diminish the primary unit's value, you're going to leave that attachment on. I know some customers come through the door and say, hey, can you strip off those duals off that tractor because I want to buy it. I want to buy those duals, but I don't need the whole tractor. And you have to say, sir, there's no way in heck we're taking those duals off, because the only way we can sell that tractor is with duals. So there's no chance we're going to do that. And the third one is we can move the attachment to another unit, which sometimes will prop up another unit's value that's not selling. But again, it can affect the value or the saleability of the primary unit. You don't ever want to hurt the primary unit. And I've been asked this lots of times, like if you drive around a car dealership, you don't see a bunch of attachments laying around on pallets. I mean, in a whole goods department at a dealership, we take this stuff off, we put it in the backyard on a pallet, and then it snows, and then we drive over with the forklift 3 or 4 times until it's totally demolished. We don't even know what it was, but yet we've got $500 or $600 or $800 on the books on it in the store there, and it's not worth anything. Or because it sat there for so long, the service technicians or whoever started robbing pieces off that pallet, whatever that item is. And now, or we've not put those little plastic caps on the hydraulic hoses and it's just full of dust, and a farmer looks back there to buy it and says, there's no way I'm buying this thing. It's got more dirt in it than what I've got. So just don't remove these things. For the most part, attachments should never be removed. They're on the unit, they're bolted on the unit, they're going to stay on the unit, they're going to sell with the unit. And the other thing that happens is these bloody attachments are sitting out there in the backyard. Drives me nuts, because the salesman will sit there for 8 hours a whole day waiting for this guy to show up because he wants to look at this pallet of weights that we've quoted him $300 for. And the guy walks in and said he'd be there at 10 in the morning, doesn't show up till 5 to 5. We've just wasted a salesman's whole day waiting for a guy to come in. He doesn't want to pay $300. He wants to pay $150 because he doesn't like the paint that's worn off on those weights, because it's not going to match the other ones that he's got on his tractor. I wasted a whole salesman's day for a $150 sale. We're not in the junk. We're not into selling junk. It's bolted on there. It stays on there. Now, a whole goods department. I'll pick on the whole goods department because they're probably the biggest user of cash in the dealership besides service and parts. But the aging is what's killing us. We can't let this stuff get aged, because the more it aged, the more it's paid for, and the more it gets paid for, you're using the dealership's cash. So we need to look at this stuff, and not when it gets in trouble, don't wait until it gets into too far along. Get after it right away. Draft a plan for each unit, how we're going to do this. Set a target by the salesman by the month. How much should they sell every month? Every salesman's got to pick one item that's paid for and get it going every month. What would that do for the cash flow in your business? Especially if some of these things are paid down 70, 80, 90, 100%. It just starts dumping cash into the business. And I know they're sidestepping past these things because they haven't sold for a long time and they're not presentable and whatever. The salesman will walk by these things and not quote them out. I've done it myself as a salesman. And we're going to talk about that in the next slide here. But new and used units, horse trade with other dealerships. And this is a sales manager or the inventory manager's job, that you got some units that aren't selling well in your market. You get on the phone, you find out where there's some things that aren't selling well for somebody else that might work for you, and you start horse trading. You're not making any money on this. You're just taking your dead inventory and trying to trade it for something that's more lively or freshen up your yard even. And yes, it's more work. And all sales managers tell me, I never have time to do that. I don't have time to call other dealerships and horse trade. Well, that's your job as a whole goods inventory manager, is to keep units in the yard that the salesmen want to sell and that they can sell. So that means you're going to buy some dogs and you're going to have to slough them off to some other dealer and get something back that might work. Now, and this isn't rocket science. You're also going to phone the wholesalers in the auction. You might have to run some stuff through those places and try to generate whatever you can off that stuff, because there's some items. I just looked at a baler on a dealer's lot here last week that has been there since 2006, a used round baler. I mean, and it's 2019 now. It's been there 2020. It's been there 14 years, a used round baler. I just don't know where it's going to sell at off the yard. It looks terrible. Tires are flat. I think it might be an auction-only item because it's been on a yard for 15 years. Okay, the trades. Trades off short lines. There's a lot of short line companies that don't offer you any terms. And there's many dealers that are confused on this, that they don't understand that when they're selling a grain auger and they take a grain auger on trade, if the initial invoice off the new grain auger was $20,000 and the customer paid you $12,000 difference, accounting has to pay the full $20,000 because there is no terms on that trade. And there's a lot of dealers that are just saying, no, we can't take trades on short lines that don't offer us any terms on the used trades. And I think most of us are going to have to start going there. And for one, I'm not sure how excited most of us are about a bunch of used grain augers, or, mine was bale processors. They didn't want to offer us any terms on bale processors, and we sold 4 or 5 a year. And to be in the bale processor business, you had to take trades that were just junk, looked like they'd been tipped over in the ditch on the way to town. And we just started to say no. And when we did that, you know what? We run ourselves out of that business, and nobody wanted to buy from us because we wouldn't take these trades, but we knew they were losers. And so we negotiated with another dealer that we would stop being a dealer for this line, and we would give it to another dealership, or the other dealership would buy all our parts that were on our shelf, take all our inventory, take our special tools, which there wasn't too much of that stuff, take our manuals, and he'd give us a big old fat check. And we were so happy to be done with that line because it did nothing but screw us up in parts, service, accounting, and whole goods. It wasn't a good line for us. I was glad it was gone. But you're going to have a look at some of these. I don't think your salesmen really understand that when the customer gives you a $20,000 check for something and there's a trade, and yeah, they might have made 15% gross margin dollars. There isn't 15% gross margin dollars staying in the store. All that money is going to pay off the initial invoice. So if you didn't get enough money from the customer to cover that, there is no money staying in the store. Now, this is a no-brainer. You're going to say, this guy's an idiot. Improved equipment turnover. Now, I'm not saying you don't have to sell more to have a higher turnover. What you need to do is sell your stuff faster. If a trade comes in on Monday and you can get it sold by Friday, you have improved your turns. And I see a lot of dealerships, they'll turn down the offers because we're going to hold on to it. Maybe we're priced too low and we should hold on to we'll see what happens in a month or two. Well, sometimes when you get that first offer in 72 hours, maybe you should take it and turn that item into cash, turn that trade into cash. Maybe when it rolls off the truck and you've got it as inventory, it's brand new. And some guy comes in to buy it. And it's not exactly as much gross margin dollars as you wanted, but man, if it works, take it. Take it. And I'm not saying sell for low gross margin dollars, but you've got to really be thinking about the cash flow implications of holding onto these units longer and longer and longer. It just doesn't work. You've got to turn this iron and just turn it faster. Not your markets are only so big. You're not going to be able to sell more iron, but you can sell the iron that you are selling faster. Pre-selling new and used trades. I mean, I don't know when the industry is going to realize that stocking $300,000 and $400,000 and $500,000 and $600,000 items is probably not going to be what we do. We're going to pre-sell. It's a $600,000 item is a capital asset purchase for that farm, and it's a capital asset per sale for that dealership. It's not something we're likely going to stock. The industry's got to get to where this, sir, if you want to buy this, you're going to think about it. You're going to pre-order it. It's going to be 6 or 8 months before it gets here. I mean, that's just how $600,000 items work. And the trades, I've seen when I got a dealership close to me that they pre-sell actually quite a bit of stuff, but they never pre-sell the trades. They said, we don't even think about the trades until the new one shows up. And I said, well, you got 6 or 8 months. You got a window there to start working on that stuff. Well, we just don't know how to do that. And I said, well, you just got to start knocking on doors and telling all the customers what you have coming and get those things going. And they said, no, we're not going to do that. We're just going to wait for the new one to show up, and then we'll start working on the trade, which I just bang my head on the table. That's the craziest idea I've ever seen. Control reconditioning. Too many whole goods departments tell me that they don't like their used units to go into the shop because it went in with a $2,500 estimate and come out with a $7,500 bill, and I can't figure that out. The whole goods department should get a quote from service exactly the same way as a customer does. And if they quote them $2,500, that's all they get to spend on that. And if they spend $3,500, so sad, too bad. Now, I understand that maybe service will come to whole goods and say, well, we've got into this thing and we found more issues. Would you like to spend another $1,000? You don't have to, but this is a choice of yours. They should be going to whoever the inventory manager or the sales manager is. He should be controlling reconditioning. There isn't going to be a $7,500. This isn't a free willy-nilly pull a thing in the yard, pull the item in the shop and work on it because it's a cold winter day and we don't have any customer work. That's not that the whole goods department's job is not to fill that shop. Yes, the shop wants to use whole goods to fill some of their holes and to recondition setup, and all the reconditioning and setup and all that kind of stuff is all part of training for a junior tech. But there's just no way that we should have runaways on reconditioning costs. That's a thing of the past. That's not how the business should work. Now, how do you do that? What do you do with used equipment? You've got to have an honesty or a discovery meeting is what they're called. You sit around once a month or however often you do, and you talk about not about the deals on these units. Is our unit priced right for the market or wrong? If we're asking $20,000 on this item, but the market's only willing to pay 16 because all the other ones we've watched sell at auction or off other dealers' lots or other ones off our own lots or other locations, we need to adjust our price down. And that means we either reduce it to fair market value or we reduce the wholesale cost to fair wholesale value. Sorry, should be a V at the end of that one. But don't just sit there and keep advertising it at $20,000 over month and month, over and over and over for 4 years until you finally realize, well, this guess nobody's coming to buy this thing at 20,000 because now 4 years later you got to sell it at 12 when you could have probably got it gone at 16. You've got to be a little quicker on this, having these honesty and discovery meetings to figure out. But during these meetings, don't talk about deals that are going on. Just talk about, is the iron valued for what the market is willing to pay right now? And you do this with your salesman, and you're going to help your salesman get educated on that. We're buying this stuff to resell. So when they start bringing in appraisals and evaluations on future trades, they start thinking about, well, where is the real market on this stuff? What is going on with this? Is this market going sideways? Is it hot or cold? And the salesman should be targeting what they sell. There's some salesmen that do better at selling certain types of products than others. So just think about that when you're trying to get something going. And to wrap up here a little bit, employee culture and cash flow, generating cash, create that culture. Every employee or department should be thinking about how their daily actions affect cash flow. This is a culture within the store, because what's going on is we're being too reactive right now on how to generate cash. We should have been proactive. We should have had parts guys that said, no, we're not going to order that part unless it's paid for, because that guy has a history of not paying for stuff, ordering and then not paying for it, and then we got to pay to return it. They need to be thinking about all these things daily, and everybody needs to be on the same page, and accounting needs to be in favor of this, because there's going to be some different changes in your processes, but should be front and center in the good times as it will carry us through the bad times. And if you can get this culture going, that you're a cash generating culture in your dealership, you'll probably have more cash you know what to do with, and then you can go out and spend it on buying iron that you can resell quickly and different things like that. But it's sure a lot more fun to have your cash account with surplus money in it versus always struggling at the end of the month. And with that, everybody, I'd like to thank you. And I think, Kim, you probably had some questions come in, or you always get questions.
I do have a few questions for you. So I guess first off, how do we get the salespeople to understand that taking off tires or extra weights is cash tied up?
How do you get them to understand? I think you just tell them. I mean, I had a trade come in one time. It was a 1086 International and a Degelman front blade on it, and the customer wanted to strip off the Degelman blade, and he wanted a discount, and I said, no, sir, it's going to cost you $500 more if we have to take that off, because my guys will have to take it off in the shop. Then we got to load it up and take that Degelman to auction. He fires back, why don't you just keep it and put on your next 1086? Well, the chances of us ever getting another 1086 in this place is next to none, so this thing has to go, and you're going to pay extra for it. And he said, well, I guess I'll take it home with the blade. My boys can take it off, and we'll go to the auction and get all the money for it. And I thought, that's the best idea I ever heard all day. How do you get your salesmen to understand that? They just need to be told that we're not allowing for this stuff. And you walk them out in the backyard. Right now, every one of you guys can walk out in the backyard, and you can point at pallets that say, we allowed $1,500 for this pallet. How much do you think a customer would pay us right now for it? Half of them would say, well, we'd be lucky to get $100 for that pallet. Yeah, and we allowed $1,500 off that deal last year for that. So I think it's just a walk through the yard and start pointing at stuff and say, what do you think we have into this? What do you think it'll sell for?
Okay, and then along with managing from the income statement and balance sheet, what percentage of dealerships are using cash flow statements?
That's a great question. I don't have very many dealers using cash flow statements. Not that they're sharing with us at the Dealer Institute or the Dealers Association. There might be some accounting departments that use it, but it doesn't seem like it's getting to us. When I go on site and work with dealers one-on-one in their organizations, I never hear anybody talking about cash flow statements. So I think the number is very low in this industry.
Okay. And then what's your best KPI to use when looking at dealers' cash flow on their balance sheet?
The best KPI. Okay, so for whole goods, it'll be my aging. When you clean up your aging in whole goods, that's the best thing you'll ever do for cash flow. When you improve your recovery rate and billing efficiencies in the service department, that's the best thing you'll ever do for cash flow. And with parts, if you clean up your aging and keep your inventory under control, aging is everything. Aging eats up cash. So on parts and whole goods, keep your aging. That's the number one metric.
Okay. And then this one's kind of a two-part long one, but so this person says they're looking into changing their service manager's compensation plan that's directly tied to net profit. Is that something you'd recommend? And if so, how would you structure something like that?
I don't know how to structure it, but I do know it's the right thing to do. I never want to incentivize. I like to incentivize them on return on assets in the department, because that makes them manage their revenue, their cost of sale, their expenses, and their inventories. And every department manager, if he's managing those four things and he's doing a great job, his return on assets will be high, and I don't mind rewarding him on that. Now, what this guy question is just on net profit, which means he's only doing it on the income statement and not the balance sheet side of it. Return on assets actually mixes in the balance sheet side of it, which is really important in parts and service. Maybe not as important on the service side, the balance sheet side of it, because you don't really, most of your assets in the service side of it are fixed assets. They're shop tools, their trucks and their trailers. They're stuff that not intending to turn into cash. They're not current assets. They're not turning into cash in the next 12 months. Now, how would you do it? I don't know. I mean, I've seen so many different ways to do it. I'm not the right guy to ask. There's 101 ways to do it. And what's the guy making now? And how do you work it so that he doesn't make any less money? He makes as much and then actually contributes to making more. Tough one.
Okay. And then going back to the cash flow statements, you said that from your experience, you don't know that many dealerships are using them, but I guess how could a dealership use them, by department, by location, and sharing them with employees?
So the one dealership that's using them started using them and using them probably the best I've ever seen in North America. They're multi-store. They have a little, they didn't start out like this, but it grew into this, that they have a little, I don't know, a pride thing, that not one of their departments, parts, service, or whole goods in any of their stores will ever have a month, even in the winter, that's in the red. It might only make $1 profit, but at least it's in the black. And they added 3 stores here 7 or 8 years ago, and I know they've added more stores now. And they've just spilled that over. That culture is spilled into the other new stores, and they just have this, I don't know, drive. All the parts managers will help each other so that no one parts department in any of that complex ever has a month in the red, ever. And every department is the same way. Now they're using a cash flow statement all the time, and those guys understand it and they know how to work it. And it's been taught. The accounting has taught them how to do it, not because accounting pushed it on them. It's because those department managers come and said, how do we do this? We're excited about this challenge and we think we can do it. So accounting had to come up and draft a cash flow statement for these guys to easily understand on how they can make their departments be in the black all the time. So that's probably the most successful. They share it with their managers. They share it with the managers will take it and share it with the department teams. It's a success story like I've never seen.
Okay. And then it seemed like you were sort of advising not to ever take an attachment off with a trade, but if a dealer does remove the attachment, what's a fair method to value that item?
So I know that there's going to be some attachments that come off, fair enough. But what's a fair value? I've seen dealers say, well, we'll use 75% of what it would cost to buy. So if the item is $10,000 brand new, they'll use $7,500. And I'm saying, well, I would be phoning an auctioneer saying, if I had this on a pallet and I had to run it through an auction, and what would I get for it? And the auctioneer says, well, you might get $1,500. Well, I guess I'm going to pay $500 or $700 because I'm going to take it to auction and get $1,500. You just need to phone somebody that has sold one or done something with one and made some money off it or sold it and know what the value is. Not what it has. No, the value of the item that you're taking off has no comparison to what a new one would be. Because the chances of you selling a new one on its own is next to none. Usually they're bolted on a unit and they go as a package most of the time. So you just need, and I know there's going to be a lot of salesmen that, well, that thing is $10,000 brand new, and we got to allow more than 700 used if we take it off. Well, no, we don't. That's what it is.
Okay. And then when it comes to pre-selling trades, what advice do you have on how dealers should go about that?
Actually, this is a funny question because I got this in the last 6 months. I've gotten this more and more about dealerships asking, how do you pre-sell iron? And the number one thing I can say, I guess, is the customer doesn't care what the value is to you. They only care what the value is to them. So when you're pre-selling new or used, first of all, the OEM has to have a pre-sale program that works and makes sense that the customer can win off of. And then the dealership needs to draft up. You need to sit there with your salesman and figure out what is the value to the customer, because that's all the customer cares about. What's the value to the customer? And that's the steps that you use. That's how you present a pre-sale deal to a customer. This is how you win, sir. And he might sit there and look at you like you got two heads, and you're going to have to say, well, you're asking, why are we doing this? Well, this is how we win too. So it's not just win for you. It is a win for us, but you're more concerned about what's in it for you and not for us. So we're going to talk about the stuff that's for you. And that's how you do it with these customers. And most of them understand it and are appreciative of you showing up and saying, hey, pre-sale might be a big win for your farm just based on how your cash position is and how your taxes work and how this works. And every farm is a little different, and whatever triggers a farmer is different than the next guy down the road. And you guys all know that because you sell lots of stuff. But you need to draft up that list with your guys so you have probably 7 or 8 different points of why should a guy pre-buy.
Okay, and then this is maybe a little bit outside of our focus, but when would you make the decision to terminate an employee that's not being productive?
Immediately, because if he's not part of the solution, he's part of the problem, and he's not helping the business. But I will tell you, I have been at a lot of dealerships, and I've seen where employees are actually great employees, but the ownership or senior management doesn't provide any training, doesn't provide any direction, doesn't provide anything. And the employee gets frustrated because actually he's a good employee and he wants to grow, and they're not growing with them, and they're not getting him engaged or involved in the business. People complain about these millennials that they seem to be disenchanted with the business. And I actually got to tell you, I find that exactly opposite. The more I engage the millennials with my financials, the more they're engaged in the business. I've never seen a group of people so eager to learn. Am I actually contributing? How's this place work? How does it? And yeah, they might not stay with you for 40 years like that old generation did, but you can get more out of them. They're looking online at the internet. You show them different things, and they go home and they Google it and say, what is financial leverage? What does it mean when he says asset turnover or equipment turnover? They're checking this stuff out and they're learning, and you're going to keep some of them, and some of them are going to be awful good employees. But if you got a problem employee, the best time to terminate them is probably right now. And I know there's not everybody to hire on every street corner. So sometimes you hang on to a guy longer because you need a pulse in the place or need a body, but he's not helping your organization if he's bringing the place down. Get rid of him.
All right, well, that is it for the questions we have. So we'll wrap things up. Today's presentation and audio will be available on the Farm Equipment website for anyone who wants to go back and review it or share it with anyone else at the dealership. Watch your email and the Farm Equipment newsletter for more information about when that's available. On behalf of Trent, Weta, and the Dealer Institute teams and the Farm Equipment staff, thank you for joining us for today's webinar. When you leave the webinar, there'll be a short survey, and please feel free to reach out to us and let us know what you thought of the live event and if there's any topics you'd like us to cover in the future. Thanks again, everyone, and enjoy the rest of your day.
Thank you.